Good morning, everyone. Today's May the 21st, and this is the Futures in 5 charts. One of those days, when we have them, they are the days that you try recordings 10 different times. So this is one of those days. Let's talk about what we've got going on. My thought is the following. This is a big move, and it's bouncing into frontline resistance. There's a lot of bullish pressure underneath, and that's going to give us a shot at recovering our initial breakdown area anywhere above here. So that is my intermediate, and I'll use that word as an intraday trader listens to the word intermediate. That's a quick cycle event, potentially up to here. So the question is the following. Do I have enough strength to take a long on the pullback and move forward? Well, that long was yesterday when we came into this 36 edge, and that's really what I was talking about, holding this level, and that is going to continue to be something really fairly important. All right, so we're going to look at that, and then we're going to see, hey, can we get up past this congestion and move up into this area? These are the two primary zones traders have to look at. Right now, it looks like it's going to make that level, but because of the location and slope, the first thing we're going to do is see a pullback. So the question is, can we pull back and actually hold 28.56? And if we hold 28.56, we've got ourselves a fairly nice bounce point up into these higher edges in general. What we have to do is make sure that our momentum matches the region. My thought is that we would have upside pressure so much that it does push us up into this direction, but we're likely to see wicks at the first pass. These charts are very mixed. You can see a lot of counter trend motion, and that really is because traders are mixed in terms of what they think is going to happen in general. Tech should get a pretty good bounce today. They got smashed yesterday with news, and so moving algorithmically, they're coming up and over this area of 74.48. Can it get up over 74.76? That's going to be the best that we can hope for there at the first pass, right? And then we'll have some trouble up here again at frontline resistance. I think tech rotation is going to be something that we see more and more in a different kind of space. Now, I'm not no, I'm not going to say that. I think that tech is particularly vulnerable due to a number of different things. So, not going to say why at this juncture. Just, I would say, be very, very careful. A lot of the big tech titans that we follow are large aging companies, and so their ability to move is maybe a little bit slower. So, we want to watch for that in general and realize that really what this chart is trying to do is lift off of these lows and come back into this area. Maybe a little bit of a W formation for those of us that know the Gartley. We could really measure the Gartley from any of these areas. And let's actually do that very quickly. We don't want to use an auto Gartley. We'll just use, well, maybe here. All right, so that's a beautiful tool, isn't it? So if indeed this is a Gartley, this is the likely trajectory. Now, I don't think that's necessarily unreasonable at all. And as a matter of fact, we could easily sort of see that formation in the Gartley here as well, right? It's a little bit messier, but you can see that it's moving right. Look at the target zones right here up into this region. So I'm going to reduce this so that you can see that just a little bit better. It almost got it right in the middle of its range there. So it's fairly good. We'll just see what happens. Not really sure if that Gartley is going to hold or not. It's just a possibility. And again, we'll do it here in the YM. This is a great tool. These charts are by motive wave. Whoops, won't let us fit a pattern in there. So let's try the smaller edge, probably because this cycle is so wide. But let's try something that gives us a different top right here and see if it gives it to us. Nope, it's not going to do that. So the formation is probably going to be a little bit more bat-sized. So let's do the bat. All right, so the movements down are a little bit deeper in the bat, and this gives us the entire wave formation, but you can see it's holding this likelihood, and this ABCD pattern in here is really going to matter. All right, so lifting off the edges, we know that 25,580 is a really big support zone. We're watching it move up in general. We're going to have a little bit of a continuation reprieve. This is my thought anyway. And so the big measure is going to be, what do we do when we get up to 900 here? If we punch out, this formation says we're going to run into resistance. So we have to look for the higher low. So a retest of this area is going to be better than just trying to take the breakout and holding, because it's likely to fade. Now, a lot of unrest sitting in this particular market. Turkey is complying with Iran's sanctions. Certainly, they need our money. They're in terrible shape. So I know they don't want to make anybody around here mad. So they're going to be doing that. We've got the API tonight, the EIA tomorrow. This is generally moving up. It probably would be moving up more if the dollar was not so aggressively breaking out, but it is what it is. And so our pullbacks are still buy zones. This chart has got a lot of upside momentum. Any kinds of dips down that we see, perhaps the API shows a build in one place or another. What we end up doing is having ourselves a pullback. Notice old resistance, new support. You want to watch it hold 62.20, and then you'll be golden. Hey, I'm doing a webinar on Wednesday afternoon that talks a little bit about how to manage yourself in a trade with a greater level of conviction when things aren't quite going the right way. And that really has a lot to do with the initial setup. And so that's what really we'll be talking about, how to give yourself a ton of room in terms of holding steady in your trade. All right. So check on my stream at the Twitter feed and look for the Benzinga webinar. It is free. All right. Taking a look at gold, not unreasonable that this is drifting all the way down here. What I think is important, let's go to a daily chart on this one. This is, this is pretty important. So here we are, right here at this level. We've got a little more support, but not a lot. So trying to pick a bottom here is going to be rough, right? Instead of 69, might end up being 65. But the big picture motion says that the bounce action event could easily give us selling opportunities on the downside that drifts quite a bit lower. And this is moving in tandem, lockstep with the dollar. And that's something that we really need to pay attention to. Could we drift all the way down into this area? Old resistance, new support, absolutely. Let's go to the weekly chart and see what we see. From a formation perspective, this chart has been really on the rise overall until it started breaking down at around 1330. And so this is still a bullish price action event. Let's try this way. But that gives us, if I extend this all the way out here, trying to hold it, and we follow that trajectory, it could be 1218 before this chart does anything of significance. Now, my thought is that it should not get that far, but it might grind sideways for a while. This is sort of a big deal with the dollar moving higher. It's going to cause a lot of friction